Welcome, my name is Vishal Texanani. Today I'm speaking to the Chief Financial Officer of CSL, David Lamont, and we're going to talk about the company's recent earnings announcement, its stock valuation, as well as its growth prospects. David, it's great to have you here. How are you?
Great, pleasure to be here too.
Before we kick off with the questions, I want to share some fascinating data insights with you about how NABTRADE customers are investing in CSL. So, did you know? On NABTRADE, CSL is the 6th biggest holding by dollar value. However, it's only held by 3% of our customer base, and it tends to be especially popular among our high balance clients as well as our active traders. And these customers who are holding CSL on NABTRADE, their position size in CSL tends to be more than 3 times bigger than their other holdings. So we have a small community of CSL shareholders on NABTRADE, but they've got high conviction bets in your company. And we'll talk more about that as we progress in our conversation. But first, congratulations on your earnings result. You beat your upwardly revised guidance on May. Can you share some other highlights with investors?
Yes, certainly, and look, thank you for those comments. It was a good year for us, and one of the things that did happen in FY18 was right across the board, we actually exceeded our budget targets. So we operate in 30 different countries, we sell into 60 different countries around the globe, and every one of those actually met or exceeded their budget targets from a sales perspective. So we did have some favourability coming through the business. Our key franchise, which is our IG portfolio, we did see our largest product in Privigen grow at some 13%, and our Hizentra product, which is a subcutaneous IG, grew at 12%. So the core part of the business continues to actually meet and exceed what the market growth is, which was around about 9.8% for the last 12 months. So we continue to actually grow our market share in that critical part of the business.
Okay, so still firing on all cylinders. Let's talk about the stock price valuation. So whenever I talk to investors about CSL and investing in CSL, the sticking points always tend to be, oh, the shares have gone up so much, and wow, look at what it's trading at from a fundamental valuation perspective. If you look at some of the broker reports on our platform, CSL's trading at a more than 100% of the premium market on a price earnings basis, a price to sales basis, although it is looking bullish from a momentum and technical analysis perspective. So I mentioned at the start how we've got a small community of CSL shareholders on NABTRADE. What would you say to them around the valuation risk? How would you explain that?
Yeah, look, it's a good question, and it is something that we do get into the market. Fundamentally, you need to look at what's our R&D pipeline look like, because this is an organisation that has been built on sound scientific research and been able to translate that into an unmet medical need to meet the demands of patients. So in December of every year, we actually run an R&D strategy session with investors, and we put quite a lot of detail out into the market around our R&D pipeline. One of the things that we did mention last year, and it's starting to get a little bit more traction in the market, is what we see as our potential in the transplant area. Now this is an area of unmet medical need, and what we do see is that we've got a number of opportunities to bring products potentially to the market to address that unmet need, to assist in the successful translation of donors into recipients for transplant, and also to ensure that the rejection rate of that transplant is reduced. Now, if everything was to play out in that space, we potentially consider that franchise is 1 billion additional sales.
Wow.
So one of the things that the organisation does have is a pipeline of future growth. And it's that pipeline of future growth that I would encourage people to look at when they're looking at what the metrics are saying in relation to PE ratios, etc. It fundamentally is a business that needs to continue to innovate, and we need to continue to actually see how we can bring new products and indications to the market to address what is an unmet medical need. So we know there's demand out there, we just need to find the right solution.
Would you consider undertaking a stock split to appease retail investors who are perhaps looking at CSL and saying, oh gosh, it's above $200 a share, I can't afford that, and perhaps significantly increasing your dividend yield to attract SMSF investors and widen your overall shareholder base? Would you consider doing those things?
Firstly, the dividend that we paid out in FY18 was up some 26% on a US basis. It's closer to 29% in Australian dollar terms. So we are rewarding shareholders as part of that through the dividend flow. We quite often get asked the question around, over $200 share price, what does that actually mean? Should you do a share split or not? The reality is that over the last 5 years, we've seen the number of shareholders go from around about 100,000 to about 150,000. So we're not seeing the current share price as a constraint for new shareholders coming to buy the company. And if we did do a share split, it actually costs the company money to actually manage that process through. It was a topic that used to come up far more frequently than it does now. I think people realise that at the end of the day, it doesn't change the underlying value of the company, and we're not seeing that it's an impediment for shareholders to actually buy in at this stage.
Let's come back to that research and development pipeline. I want to talk about an article written by one of our content partners called Intelligent Investor. And they wrote an article titled CSL and Australia's Biggest Lottery Ticket, which talks about CSL 112, which, if I understood the conference call correctly, is the largest trial you're conducting. It's going to cost about US $500 million. You're recruiting 17,000 patients, and it's designed to cut the risk of recurrent heart attacks, almost a second chance at life, if you will. Can you articulate to shareholders, given you're sinking a lot of capital into this, what is the risk-reward proposition of CSL 112, and when will they know about the trial's success or failure?
Yeah, so it's a good question, and it is the most significant trial that CSL's ever undertaken. So it will be over 3 to 5 years. So the 500 million that we're looking to invest into the phase 3 trial is not as though it's all in one hit. It'll be phased in over that period of time. Yep. And we certainly think that through that process, there's a couple of check-in points that we will have to know whether the trial is actually proving to be futile, in which case the key opinion leaders that are actually managing the trial for us would advise us. Outside of that, it is a blind trial. So we don't get to see the results as part of the process. We get to see how the uptake's going, so the number of patients coming into the trial, and we will give some indications of how that's tracking to the market. But outside of that, the best thing I can say to you is we don't hear any news, because that actually means that the KOLs that are running the trial for us, so key opinion leaders, are actually telling us that it's futile to continue. In other words, we're not seeing the efficacy that we would expect as part of the process. As far as the risk-reward side of things, critically what we need for this product 112 is what we call fraction 4 that we already are collecting out of plasma. At the moment it's waste. So if it is successful, this will be a high margin product for us because effectively the raw ingredient that we need we're getting for free. And it is going into an area of unmet medical need. Unfortunately, in the world today, once somebody has had a first heart attack, a number of people have a fatal event within the first 90 days by having a second heart attack or indeed having a stroke. And it's that white space that we're actually looking to address.
Oh, wow.
And so there is no other competition in that space. Quite often people talk about statins and other activity. What this will enable patients to do is hopefully not have the second event, which means they're in a situation that they can then avail themselves of other forms of therapy. So it clearly is an unmet medical need. If it is successful, it will be a game changer economically for us. It will be a large product to sell, and as I said earlier, with a cost base that will be extremely low. So we look at that risk reward and we think that it is certainly worthwhile pursuing because if it is successful, and touch wood, and hopefully it is, then it will actually be a significant changer for us financially. But more importantly, it also is addressing an unmet patient need whereby there is unfortunately a number of people out there that have that second fatal event, and we're looking to reduce that.
Okay, fascinating. Thanks so much, David, and thank you for sharing these great insights with me on CSL, and all the best with CSL 112. It absolutely sounds like a game changer for patients.
Great, thank you very much and appreciate your interest.
No problem. I hope you found this video informative. Now please remember what we talked about today isn't a recommendation to transact in CSL shares. If that's something you wish to do, please read through all the broker reports and any other research you can access, and please also consider seeking financial advice. My name is Vishal Tekshanani, and I'll see you next time.